shift gears now and talk about a theme that we've been focusing on right here on the channel. It is to do with railways and the kind of exuberance that you've also started to see on railway stocks. Look at Titagarh Wagons. That stock is higher by about 77% year to date. So talk more about this theme that's panning out on the stock market, and to find out why we're seeing so much exuberance, joining us is Umesh Chowdhary, the Vice Chairman and Managing Director at Titagarh Wagons. And we've also been joined by Indrajit Mookerjee, the Executive Director and Vice Chairman at Texmaco. Mr. Chowdhary, I'll come to you first. This budget, 2022, there was a lot of applause around the kind of allocation that we saw for the railways. Fine print showed an allocation of 1.4 lakh crores. The big, headline, of course, was to do with the wagon program over the next 3 years. That is something that we should talk about. The trains that would come in, the Vande Bharat trains, 400 over the next 3 years. Is everything on track, on ground?
Yeah, good morning. Thank you for having me with you. So absolutely, I think you used the right metaphor. Things have gotten back on track. In fact, I would say that the track has been prepared over the last 5-7 years of this government. And I've always maintained that the government have very smartly and very carefully invested in capacity creation in the first part of their tenure. They invested a lot on the track capacity. They invested a lot on the signaling capacity. And for the first time in the history of railways, they've not shied away from taking on debt. So it was a very, very logical consequence that when they've taken on debt to build capacity, in order to service that debt, they'll have to utilize capacity. And that utilization of capacity would only come if they start investing in rolling stock, where we come in. So we've seen the railways have very clearly started investing on freight rolling stock as well as on passenger rolling stock. And the way I
Okay, let's also bring on board then, the management coming in from Texmaco too right now to highlight what really is going on with their business. Indrajit Mookerjee, Executive Director and Vice Chairman, on the show with us. Indrajit, Indian Railways is going through a major churning with big structural changes, and, the scope of operations as well in the railways now at a cusp of change. How have you looked at this drastic shift that one is currently witnessing?
Radical change that Indian Railway is going through. If you start from the capital investment, the numbers that we have in the media is that the budget for the 22-23 were somewhere at about 2.15 lakh crore, which now will be pushed up to 2.45 lakh crore. And this is almost a 14% increase from the budgeted capex. And it's expected that the expenses will be all in terms of laying railway tracks, new tracks and modernizing tracks for speeding up of trains, buying new trains, high-speed modern trains, wagons, locomotives, electrifications, signaling, developing railway stations, and last but not the least, making quantum jump in terms of railway safety. So I think the railway sector has suddenly opened up and offered lots of opportunities in the domain.
Right. Indrajit, if I could just take a follow-up before we get back to Mr. Umesh Chowdhary as well. You have received an order of 20,067 wagons from the Indian Railways with an order value of 6450 crore rupees. What is then the outlook on executing this order book and the timeline?
You see, Texmaco is a very old company with a proven skill. And these are the numbers which Texmaco have done earlier. It's nothing new. But I must admit that last quite a long number of years, I just don't want to go by numbers, but maybe almost half of a decade or more than a decade, there were hardly been any orders coming from railways, and also the segment was very dull. So in such a situation, any industry, the inefficiencies start creeping in that kind of an slack situation. But now that the requirements is high, the industry will have to meet to the challenge, will meet up to the challenge. And for Texmaco, we have already done that before. We need to improve. The first thing, we need to improve our efficiencies, our quality standards, so that we can get it right first time, improve our productivity, as well as we also have started working on round the clock, which we were not doing. So these are the very first copybook style operations which we need to do and which we are doing right now to meet up with the challenge. Now we have to really see how things move. And we also have some plans for expansion of capacity or divesting certain portfolios. But I think it's too early to say that.
Umesh, railway capex has been a yesterday's trend, not tomorrow's story. But markets are excited about railway ancillary or railway capex stocks as if there is a new tomorrow. So fundamentally, what is a yesterday's trend? Why has that become the new sunrise industry? Because this is one sector, again, unlike defense, where you don't have any large imports. It's not like this sector was always Atmanirbhar. So why is the delta coming so much?
So it's very simple. I think it's the point of inflection. So if you look at the railways, historically, railway used to have 80% of the market share. But that's about 3-4 decades ago. It continuously kept on falling and falling and falling, and it went down to as low as 25% or early 20%. The trend reversal that has happened is something which is more a matter of intention. The government has clearly given or conveyed its intention that the railway is going to be the preferred mode of logistics, and therefore the delta available, the runway available for the railways to really reach its potential is so large that it is exciting for everybody associated with the railways.
Fair point. So, Umesh, my next question is that the cycle is changing, which means top line changes. But will it be a reboot in terms of margins and cash flows? Because what we may look at is an exponential top line, but that may not get reflected into a bottom line or cash flows for the company.
So once again, I've always maintained that our business is not something where we need to look at a big change of margin levels. I think our business, the top line is what drives the bottom line. And we've always maintained that an EBITDA margin of 8 to 10% in our business is a good EBITDA margin. It's a achievable and sustainable EBITDA margin. So obviously, if you look at Titagarh, so in 16, 17, 18, we had an average revenue of 300, which grew in the next 3-year period to 1,000 crore, and then last year about 1,500 crore. And then now we are sitting on an order book of 10,000 crores, which has to be executed over the next 3 years. So obviously, once the top line starts going and we maintain the EBITDA margins, then the absolute number of the bottom line improves.
Umesh, if you would permit me to ask a stock-specific question as well. The last time you were here on the channel, you also talked about, how you signed an understanding with the Italian government for one of your subsidiaries, and valuation still had to be decided. This was, of course, for capital support. Any forward movement, any update that you can give us?
So we signed this agreement. The valuations were all decided, but there were certain regulatory approvals that were required in order to conclude the transaction, and that is something which is ongoing. August, as you know, is pretty much a holiday month in Europe, and nothing really moves. So now offices have started. In fact, today would be the real working day that Europe will begin. So we hope that in a few days, a few weeks, this should get concluded. So it would be speculative on my part to give you a date, but I think it should not be very long.
Okay, that's a headline. You'll have some more updates for us in the days to come. Thank you, gentlemen, for joining us here on ET Now to help us understand why